Hello everybody and welcome back to another gold analysis video. So here, this is a special case where gold has hit $3,000 mark, and we will have to have a beautiful understanding of what is going to happen, what could potentially happen considering the mindset of the retailers and the optimism that they're in that gold has hit $3,000, right? So first, let us start with levels marking, and there's some interesting historical data that I want to show that we could potentially make use of. Okay, so this is one marked in black. Next zone will be this, if I'm not wrong. Yes, this will be marked in blue. Um, Create a form. Does this make much more sense? Yes, this makes much more sense. Then if we come to the middle zones, it will be this. Bit up. Yeah, this should work. So I think this should be enough for the overall trend. Okay, so what do we see? Gold has been relentlessly rallying the last week. So last week it was this 90-degree rally that had taken place, right? I'm pretty sure most of us would not have expected this at all, considering that this choppy phase was prevalent, right? Nobody would have had the confidence to hold such a big trade. Even if they had gone the trade, it would have been a very small trade because it had immensely shaken the confidence of people for the last 2 weeks, if we can see, I think. Because see, look at the sideways it has been. Look at just look at this. There is no way you could potentially make use of the trade here. Okay, so considering that fact, it has been a relentless rally for gold. A trend line I draw, which is one here, right? And the next one I could draw is like somewhat like this. Okay, so there are two trend lines in place, and then dropping into the 15-minute time frame, I will get this zone in place, right? It has been swept already. Look at this. The liquidity has been swept and it is back to the same zone. Now, just understand this, okay? At the $3,000 mark, which is a historic zone for gold, when gold hits such a historic mark, what would the retailers think? And it has not stopped from 3,000. It has gone until $3,005. So what is the retailers' sentiments here? Everybody is optimistic because the markets worldwide are crashing. Crypto is down, US markets are down, Indian markets are down, every major market is down. Right? Okay, for us, Indian markets are major, so I'm considering keeping that in place. So every major market is down. In such case, everybody will resort to gold. And that has caused this untimely buying. That has caused this huge rally in gold. But now, what can be the next move? Every person, every Tom, Dick, and Harry is optimistic on gold. Now, is that a good sign for gold? No, I don't think so. Because the institutions, they would have bought right at this lowest point. To be frank, they would have bought here at this point because this is an M pattern. When this broke, retailers would have shorted, institutions would have bought, causing this huge rally, right? So, when such institutions who are sitting in the buy of gold from here and they've already made about 1,000 pips in profit, would they still hold? Would they still buy for more? No, there is no chance. So, a pullback or a correction is what is required right now because institutions have to book their profits and profits are booked when the retailers buy. So for institutions sell when the retailers buy. It is a zero sum game, right? So how do you convince the retailers to buy by hitting a historic mark, right? And $3,000 is one such mark. So when now just observe the behavior here, okay? 15-minute candle, it closed above $3,000, right? This candle, if you can see, the closing was above $3,000, right? So what did every retailer do? Okay, it has closed above 3,000, it is going to $4,000 next, and that will be our target. They will go buy. That is when the real manipulation takes place. Look at this dump, the next candle. The next 15-minute candle had a 125 pip dump. That is how manipulation works. That is how liquidity works. Liquidity has been grabbed from the 3,000 level. The buyers have been trapped, the retailers have been trapped, and the institutions have started to sell. Right? Now, what? Now, I will show you one such instance in the past. Okay. So if we see this, this is not such a big instance. Okay, but this can be considered to the relentless buying in 1 week. So if we see, look at this. This was a straight buying, right? But this was not such a major zone. It was 2940, so it wasn't such a major zone. What happened? It hit the all-time high, dumped, and then a bit of sideways nature, and then selling, sweep of this liquidity, and then again slow selling. So basically, it was choppy and volatile in the next week. So in the upcoming week, we can expect a bit of choppiness, a bit of volatility, or a bit of correction. So I am sideways to bearish in the upcoming week. For the buying side, we can again look for alternatives, but this is how it has been. Then the biggest instance, look at this. This is the box that I've drawn to. Okay, so this is similar, right? This is similar to the current market. A horizontal level has been broken, not retested as yet. It went, hit an all-time high, and dumped, right? So this is pretty much similar. So what happened next? Look at this. Every buyer was invited here, and his liquidity was swept, and a selling move ensued. So this move was about 200 pips, and that was well enough to cover our targets. We are not much of a holding people, so this is what all we want, right? Then this pullback came, and then it fell more. That is none of our business. All we want is to capture this few pips, right? So look at this. When there is relentless buying, nothing works, right? Okay, we could have argued that it was halting here, and if it has broken, then we would have bought. But imagine, guys, it has been relentlessly going on a buy side spree for a long time, and a correction was due. When will the correction come? Right? A correction was required. But then, if we zoom out and see, the correction hadn't come from here. Here, correction hadn't come. So if we draw the Fibonacci until here, look at where it has reversed from. The 0.5 zone, the 0.38 zone. Look at this. And look at how it has reversed. This was a major zone, right? This was a major zone, resistance, a bit of adjustment, okay. Resistance, support, then liquidity, then again resistance. So this entry could have been planned somewhere out here with this stop loss, which is small, and this target again, a fair trade, 1:3, right? So it has to have a healthy correction to be able to continue the up move, and then see how gold has gone. Look at this, right? The correction is what is needed. And similarly, if we see here, it is at a huge high. It is at a very, very big high. And if we see, correction has not come from this point. The correction is due from here, right? A pullback is due from here. So drawing the Fibonacci right from here to here, what do I get? 385 to 335 zone is here. So what I can expect before I can go to the buying side is a liquidity grab of this low. Grab the liquidity, do similar structure, and then we will target the all-time high again. Right? This will be the plan for the buying side for gold. Even if you go to the 4-hour time frame, this is where the sweep is required. This is where the market has to sweep before I can buy into the high again, right? A sweep is required no matter what. So what can our plan be for the next week? Now, if the market opens here, it would not be right to sell at this point because it is at a very bullish stage and it can be very much volatile. So you either have to scalp for the sell side or avoid selling. Okay, that is the two options you have: scalp in the sell side or avoid selling, and wait for the big dip, right? To take advantage, if it halts like this, we will somewhat shorten this lower high and target this trend line over and out. End of trade, end of week, everything, right? In case in the open it goes all the way until here, right? It goes all the way until this zone in the opening, and then it halts. Then we can look for the upside. Okay, this is a well enough correction for an upmove, right? So the two plans that I shared was you sell at this point until this trend line over and out, or you wait for the dip all the way until here, ding dong dong, halt, and then boom, back into the all-time highs. Sentiments are bullish. Gold is being a safe haven right now. I did not deny the fact, right? But buying at a logical level is all that matters. You have to have a pullback before you can buy into the highs again. And this is what the plan says. Okay, that is it for the video. If you want to join my Telegram for my trade updates, you have the link in the description, and the Exness broker that I personally trade on, you have the description in the link in the description. My bad. So do consider, and I'll see you in the next video. Have a profitable journey ahead. Thank you.